Welcome everyone to the Kendall Report. It is Tuesday night and looks like futures are getting hit as we speak. Some of these earnings are starting to scare some folks. But this is what we've been talking about for weeks, right? We're finally getting that move sideways to down. We're taking out the 10-period moving average, going to do even more than that. As I told you, I guess Sunday and yesterday, I'm going to be doing a deep dive on going through the quarterly outlook and just kind of break this thing down, because I think we're at an interesting juncture. And just about, it's interesting, everybody that was bearish appears to be now bullish, which is interesting, right? Pretty typical. I'm not outright bearish, but I do expect to see the market start to pull back, and we'll discuss some numbers. And on a quarterly basis, I think you'll find this interesting when we get into the longer term aspect. So just as a setup and a reminder, there's no video tomorrow, my birthday, so I'm taking the day off, going out to dinner, but tonight I'm going to go through basically a really deep dive utilizing primarily the S&P, and I'll be using the cash index so I can have a longer term look back, and we can do the long-term analysis, especially on the quarterly. So so like I told you last night, bring the popcorn. I don't know where we'll end up at and where we start. I have virtually no notes, by the way, so this is a complete freelance for the most part. We'll talk a little bit about what we saw yesterday, and I probably, we're probably not going to get too deep into a lot of stuff. I'll just say it now, we've got ADP coming out tomorrow, expecting 185. Rest of the week, unfortunately, I'll mention this now, but we'll have the continuing claims, all that. I think it's around 2.25 expectations for continuing claims, and then we'll be into Friday, and I'll have a video on Thursday night for Friday setup and coming into the employment numbers, so I'll be able to cover that. But tomorrow night, I'm sure there's a nice bottle of red wine in my future, and that'll be fun to do. But like I said, not a lot of notes. We'll go through the database a bit. I suspect that maybe we're going to start to see that finally pull back. Some of the things I've been talking about, and I've taken not a lot of heat, not that it matters, but we're just stalling here. I think yesterday's video I talked about how we're stalling here. Once again, we saw that crazy rally at the close yesterday. Basically, all we did for the most part was took that back, and we traded down into the 90s on the S&P and bounced around, but back to 06 was kind of the ceiling after the initial sell-off. 06, I think we printed almost 08 once, and then we declined into the close again. But so there's a lot to cover here. Yesterday we did get ISM manufacturing. That came in better than expected. Of course, Caterpillar came in pretty good yesterday as well. They're not going to wrap her off. Maybe some of this infrastructure money that we talked about a couple of years ago, maybe that is actually happening. I don't know. I know there was a scenario out there that a lot of the major roads and interstates have been in pretty bad disrepair. So we'll see how that all plays out here fairly soon. But I've been seeing and hearing about a fair amount of construction that's going on around places, so that's a good thing. So let's go ahead. Most of the stuff I'm going to do tonight is really the technical side of the world and getting into this deep dive. So maybe I'll be able to get done within the typical hour or so that I normally spend. But I don't really have a lot to talk about here. Thursday night, I think I'll have much better insight into what we're going to be looking at for the end of the week and how the employment numbers are going to look. But it does look like we got a little bit of a softness coming into this market, coming at us pretty quickly. So let's go ahead and get into the WaveTech database, and then we'll be able to move on from there. All right, so here we go. We're looking at right now, we're looking at 75%. Yesterday we saw 293 sells, 293 buys and 346 sells. So a slight negative rotation. I suspect we'll start to see more of that in the next couple of days. I've been talking about getting down into 68, 62% on this database. That's still relatively bullish, still keeping somewhat of a forward-looking positive tone here. And I'll discuss, like I said, on Thursday, we'll talk a little bit more about what the expectations are for the intermediate. And that's still in a really good deal. Yeah, and I see somebody commenting about this. Fitch downgraded the some of the debt, which is kind of funny because these guys, I guess they're just trying to grab headlines. But anyway, so let's go ahead and let's just get into the technicals. There's not a lot to talk about on this stuff right now, but just know that we're probably going to see this. If you're a WaveTech user, institutional or otherwise, just know we're probably going to see a little bit of selling, and some of those trades that you've had on for a while that have worked really well are probably getting close to starting to rotate out a little bit. So just watch for that type of action. I wouldn't be too concerned from that standpoint. And we'll, yeah. So let's go ahead and get into the technicals here. Okay, as usual, let's start with the hourly chart. So we'll do a little bit of an update here. This will give us a little insight. It's interesting. You see this. I was thinking, what is that funny spot on the chart? Well, that's the gap opening, lower opening that we just got just a few minutes ago. And we've already bounced off the lows. The low is 72. We're already trading 10 handles off of that low. A lot of times these, there's just a great trade off of a lot of these spikes. And that's been a really good, a really good trade a lot of times, not just on the buy side, but these spikes. And I'm a scalper by trade. So whenever I see that, I would get FOMO. I missed a 10 handle bounce there. So let's just look at what's going on. We'll set up for tomorrow, and then we'll get into the longer term aspects here. So I'll do pretty much typically what I do every day, and then we'll lead into the longer term charts. So what we're looking at is, once again, and it did it last night, by the way, we rallied right into London and then sold, and then started to sell off as we came in last night. So we started to roll over just as expected. Looks like another potential upside rally here over the next couple hours. Maybe looking into, once again, maybe extending it past the London. So we'll see if we can get some recovery here. May not happen, but the algos are suggesting that we'll get an hour up, maybe then a backfilling, and then some recovery. So depending on where it gets to, we should see some recovery back toward these moving averages. So it's not like there's a rally coming, but a recovery back into some of these moving averages that we're looking at here. So let's go ahead and just do a daily chart and get a feel for the market grid for tomorrow. Very interesting. And like tell you folks all the time, I don't go through and set up the charts ahead of time. I do them live. So we got new Fibonacci downward targets here, which is pretty much what I've been talking about for a while here, as we're looking at 3 fib targets on the downside. Right now, those targets are 45, 47, 45, 14, and 44, 94. So basically projecting down to the, guess where? The 40 period moving average, which is 44.78 rising. So we're coming, this is what I've been talking about. I think we're going to move into these averages. Every time the market makes a slightly new high or it trades up in this pattern, everybody's been telling me that I'm wrong, but it's really, this is the pattern that I've been expecting. The algos actually predicted that this is what's going to happen. And we're seeing this really flatten out. And I think what happens here, just on a short-term basis, looking out, let's say 8, 10, 12 sessions, is we're going to flatten out and get squeezed above the 40. The 40 is going to be pretty substantial. I'll go to the, once I get done with this, we're going to switch over to the SPX, and I'll go to weekly, monthly, and quarterly, and we'll just start breaking down some of these patterns. And even though we're only the second month into the third quarter, I think it's worth going into kind of a building expectations as we come into this Q3. So let's just start. Let's go ahead and flip over to SPX. Hang on, before I do that, market grid tomorrow, R1 4610, which has been an absolute ceiling. We've been trading right into that range. So 4610, and S2 is 4582. We've already printed below that. And so we're looking at, oh, that's interesting. S3, that spiked down. S3 was right at that number. We're looking at 45.72.41. The low so far, 45.72 even. So we bounced right off of S3. So that's interesting. STX 45.63. So it does, like I said, we're set up, so we're going to probably recover overnight. So that makes sense from that standpoint. And yeah. Yeah, I'm just green thoughts. Don't get too excited about the rating downgrade by Fitch. Fitch is pretty much a bogus operation. They're just grabbing headlines. They got you thinking about them, so they did a good job. But let's go ahead and let's start getting into, let's go to the SPX now. Okay, so I believe tomorrow morning, and I meant to get this number, folks. I'll try to put it out on Twitter if I find it, but I believe there's a big announcement of the Treasury auctions coming up, and maybe this is why Fitch is trying to get into play and get into the headlines here. So that's a big headline for them to grab. But let's go ahead here, and this is the daily. It's interesting, just looking at cash is much more pronounced in the way that the algos are predicting, but let's get over to the weekly here. And this is one of the things that I've been discussing. Even though we got this short term, the 10-period moving average is strongly up, although we're going to see the upward momentum start to fade. And by the time we get toward the end of August, there's potentially going to be some vulnerability to that value to be challenged. And what's projected on the algos on all three, PPM 1, 2, and 3, is that we're going to see a loss of momentum, and that we're likely to see start to move down and challenge to 10. So we're going, right now we're above the first derivative. That's this green line. Where, if you see where my cursor is, I'll just move it a little bit here. And that it looks like it could be broke coming into next week. That tells you that we're going to challenge that 10-period moving average, which is also the 40. The 10 at the moment is 44.38. I just talked about the 40 is 44.78. So they're slightly different, but those numbers will come into play. And if we just look at the change of what the 10-period moving average is, it's going by about 40 handles. So that's going to throw it right at 40.78 when it updates this weekend. So everything's going to be 40. I'm saying 44.78 is that number. That's the level that we could challenge. If it takes 2 weeks, then all of a sudden 4,500 is going to be at least the point where we should hold that support level and start to maybe consolidate even here on the weeklies. Yesterday's video, I called it the market's stalling, and I still looks like that's what's starting to happen here on the weekly. And as we go through this analysis, you'll see how everything starts to fit together. So last night I mentioned I didn't know if I was going to go top down or bottom up. So we're going bottom up. So we started with the daily. We're now at weekly. We'll go to monthly and then quarterly, and then we'll try to put this whole puzzle together on what all of those charts are telling us from the standpoint of trying to compile all of this stuff. So as we look at this, like I said, the algos are suggesting as we come into the end of the month, and by the time we come into September, we're actually potentially in a negative where the 10-period moving average would be declining, but that's going to require us to be trading below that value. And I will update that as we get toward the end of the month. But right now, looks like a solid challenge of the 10, which is what I've been talking about for several weeks now, for the last couple of weeks. And that should be coming in, like I said, in the next 2 to 3 weeks. And we'll see what kind of challenges we get. Once we get to these levels, the algos are going to be, they will be going to recalculate and give us some more insight into the future. And I think the key things that are going to be to watch it will be how the WaveTech database acts here and how all the patterns start to put together. And I'll be doing this every day for you folks. You know that. Just keep showing up. Tell your friends. Still like to see this channel grow. I'm working on a couple projects, so we'll get it growing here pretty soon. All right, so this is the pattern that's unfolding. Looks like a challenge of the 10, which is the 40, around 44.78, 45 even. All of these numbers are moving higher every week. So every week that goes by, these numbers are going to go up. So somebody's going to say, Kendall said it was going to 44.70. I said we're going to test the moving average. So that average is rising, and it's actually rising at 0.84. This is a very bullish upward slope right now. So we're ways, like I said, we're not going to have a really negative value on this thing until we get to about the second to third week of September. So folks, it's August 1st, okay? So we're talking 4 to 6 weeks. So make sure you make note of that. This is going to take a number of weeks to unfold. All right, so let's keep moving up the scale. Let's go to monthly. I mean, it's just about everybody. I even see here chatter here, NASDAQ's going to new high. Everybody's into the new high mode right now. So I'm not necessarily a contrarian, but I will tell you that I think that the database is going to lead us and tell us a lot about the characteristics of this next cycle. Right now, I'm, like I said, looking for a pullback, and we're really still very bullish here on the monthly S&P. You can see that angle of attack is pretty substantial. We're at 1.70. The numbers get a little bit bigger on the monthly, but we definitely have a lot of momentum, and it looks like, it's going to carry us. This momentum is likely to carry us higher into February. So you could be right. We could get a all-time new high here, not a problem. There, and I'll touch on some of this stuff when we get into the NASDAQ. But the bottom line is that this angle is still valid. And if we look at where's that value right now, it's 4,200, going up 70 handles per month. So it's going to be literally in 2 months, it's still 42. There's a long ways. I don't see us getting to that level. I do think we're going to see somewhere around 4,500. Maybe we print into the 44 handle. But this thing's so resilient. What's going on? We'll see what happens from the standpoint of the pattern. So, like I said, we'll watch the WaveTech database. It would have to, for me to get really negative, we'd have to get below 42% bullish on the daily. I don't think that happens. I think we pull back to 62, 58%. We should hold in that range. So this pattern is very much intact. Looks like we're going to climb. There's bullish pattern all the way into May of 24. So this is substantial. So now we go to the long-term stuff. And it's interesting. I'm going to flash back all the way back to January of 22 when we had that first outside reversal month. And I thought we would get 3 months or 3 quarters down, followed by 3 quarters up, and then we'd have a pullback maybe to retest the lows, which would be that 3502 number on the cash. On the cash, it's a bit different. It's 3491 on the cash. So I thought, well, that's where we're likely to get. But what we're seeing, if you look at the algos here, they're starting to fade pretty quickly, meaning momentum's started to be lost. We've taken out first and second derivative here, and we've already, when that happened, we've already tested and went through the 10-period moving average. This could be a right shoulder, and then I would watch very closely. If we look at the market grid here for the quarterly, this is probably an interesting number. R2 quarterly, 46.87. We've been pretty darn close to that. On the downside, the low so far of this has been 43.85. S1 43.38. So talk about right on, pretty much almost on the money there. We're about 40 handles above that. So far this quarter has unfolded exactly how it should be from the standpoint of the pattern that's there. Now, we're not going to get an update on this until into October. So the key will be this. When we come into October, if the market grid on the quarterly turns down, that will suggest that we're going to get probably a pretty decent dip sometime in I would not suspect it would happen in Q4, but possibly in Q1 that we start to get some challenges of some of these moving averages. So I'll be updating this first of every month like I always do. But we're definitely seeing momentum as the longer out we go. Of course, you have to realize this is each bar here is 3 months. It looks like the peak downside finishes way out in April of 26. So, and that's suggesting we're at a negative rate there. So that would be interesting if we got to that type of level. But for right now, it looks like that we're going to stay above this 10 quarter moving average. 42.24, it's way down there. It's very similar to some of the numbers I just talked about on the monthly. That is your extreme case. I'm not saying it's going to go there. That's the extreme support on a longer term basis. If it went to 4,200 now, it would definitely would mess up a lot of folks' heads, especially since everybody's now joined there's a soft landing club, and everything's going to be wonderful looking forward into 24 and 25. I saw some character on Bloomberg today, and I was just like, man, I hope I don't sound like that guy ever. But he was just going on, and this whole scenario he'd conjured up. And listen, we all do this stuff. We try to do forward looking and what would be the scenario that makes that happen. I've talked to you folks all the time about that. What it looks to me is we are running pretty close to cycle. I thought we'd only get 3 quarters up. This is the 4th quarter that we're positive. We made another new high, but it does look like things are trying to stall here. And the key will be, I'm going to say it again, is that short-term database and whether we start to top out here and start to challenge even deeper numbers than what I've already talked about. But for now, we should be really safe, expecting on the daily basis a 40-day, a 10-week test should occur. They should hold. There should be a very strong tradable trade off of that level. So that will be the scenario that I will be playing out as we go forward here. But it's interesting because I remember talking about when we got this reversal that these quarterly charts, the algos are just suggesting we're just going, we're going to continue to lose momentum. So that just tells me, let me draw in something. Let's do this just for another second here. So maybe what we're getting here, there's a couple arguments. I'm going to draw something in real quick just so we can tie this together. So maybe what we're getting here is like an ABC pattern down into this 21. So we could see that where we actually get a couple quarters where we're negative, we move back into these ranges. That's certainly a possibility from the configuration standpoint. It looks unusual just for it to go off the chart here and just keep going higher. That doesn't look like as likely as a pattern as the one I just drew in, which would be probably where we got, this would be an A, B, and C probably is maybe a 60% of the A, and then maybe then you get that move up, and no matter how you stack it, maybe it's coming into the election next year, all that stuff. I like that scenario the best as far as what I'm seeing happening. So that would suggest that maybe we top out somewhere in here. We get Q4, Q1, maybe a little bit more to come into these moving averages. But it looks to me that ultimately, just drawing this in one more time, look at this. This is really, if you draw a line here, you're probably going to get some potential, some kind of consolidation, and it could go all the way out. Of course, I'm hoping to be alive in 2030. So that's a long ways from now. So the point is that we're looking at the pattern. This is going to take a very long time, and this is worse than watching paint dry. This is something else. This is maybe, I don't even know what to compare it to, because it's multiple years in these patterns that we're looking at right now. And I was called crazy. I can tell you, if you had been around me going back a while back, I'd have to go to the monthly chart here. But when we got into this area here and going back way back in 2008, I was arguing that was a wave 4 and there was a whole nother sequence to the upside. I actually found something very, very interesting, and I'm going to try to bring this up. I'm kind of in the mood to see about. I'm going to attempt something here. I'm going to go to our old website here. I'm going to pull this off screen for just a minute while I log in. I'm going to try to show you folks something. And this goes to those of you that have been in the live room with me. This goes to one of these patterns that we talk. I talk a lot about, and let me just see. I'm trying to find a document here real quick, so bear with me. Hopefully, I'll find it. I'm not wasting our time here. Almost there. All right. So I was a little bit ahead of my time here. Okay. So this was my 2017 outlook. What I wanted to show you, which I found this the other day by looking back, I'm going to try to blow this up so you can see this. One of the things I was talking about at the time was some longer term objectives. I'm going to try to find this thing here real quick. I'm not going to find it. I should have, just give me a second, okay? Yeah, this might not be the report. It might have been 2016. Anyway, I was forecasting 4,600 back in 2016 for the market to end up going there. And so that was an interesting scenario to paint, because I'll have to find it and bring it up for you folks. I'm sorry, I thought I could pull that off. It didn't work out. But the point is that this type of pattern that we're looking at right now is somewhat predictable, but like I said, we're looking way out into 2026, 2030, some really long-term stuff, which becomes a little hokey when you start to predict out that far. But there are some methodologies that would suggest that this is absolutely a possibility, but we could just end up in a massive consolidation. Maybe let me come back on screen for just a second. I'll finish this off here. So yeah, so what I want to bring up here is, well, maybe Fitch is right. Okay, maybe what we're getting to, one of the numbers that just kind of triggered me when I was looking at that is that I was talking about when will be the peak number. When is the debt going to be so big that finally it means something? And, and I was joking in that article, maybe it's 22 trillion, 24. Well, we're over 30 trillion, 31, right? So this number, maybe we're finally hitting that peak. I still think there's an awful lot of demand for treasuries. The world has gotten very, very large and it's still growing from the most part. And this demand for treasuries, at least unless the new alliance of BRICS and those type of things actually get traction, but maybe we're finally hitting some kind of situation like that. And what that would represent is that scenario I was just painting on that chart, on that quarterly chart, is that we end up in some kind of bigger ABC pattern, and the C would carry us easily into 25, 26, 2025, 26. Then we'd be able to move out of that range going forward down the road. Maybe during that time would be some consolidation of debt, or something has to happen where maybe debt actually gets paid down. Not sure how that happens. I was thinking about something the other day, all the trillions and trillions of dollars that are wasted on just stupid stuff like, 10-year wars and all that stuff. If we stop doing those things, then that could decline if you stop just wasting money because you have somebody else's money, taxpayer money, to spend. So it's possible that we get into a monster consolidation. When I look at those charts, I start to look at exactly that maybe we're just going to have this monster consolidation. The good news is these moves and these ranges are huge. So there's going to be great multi-year, 3 and 4 and 6 quarter movements that will give you a lot of opportunity to make money on both sides of the market. So it's interesting because when I look at these charts and these long-term, you start to realize that maybe, just maybe, these things are going to take a long time. We're going to have to consolidate at some stage. We can't just run the debt to 60 trillion. And I guess just seeing that article that I wrote back in the day is that that was the whole hypothesis, is when do we hit the ceiling? When is enough, and when do we have to deal with that? So I jokingly, I think Fitch is just trying to grab some headlines, but who knows? I mean, everything could derail if that happens. There's a lot of folks that are making big bets on treasuries that aren't going to work out very good in that. So anyway, I just want to come on screen and just kind of finalize that. We're going to go through NASDAQ, and I'll go through the rest of the charts fairly quick, and maybe we can get out of here faster than I think. But just remember, just telling you again while I'm going back to the analysis, no video tomorrow. So just remember that. All right, I'm just going to leave this up. So maybe we'll do a quick top down on the NASDAQ. So this is the monthly. The unfortunate part is all the indicators, not enough data on this chart to get the algos, but you can see that PPMs are drastically trying to roll over here. And in fact, I think what I'm going to do, just bear with me, I'm going to set these back so we can see what these are looking like. Just going to take our time. So if you have the indicators and you see a chart like this and it's not calculating, what the problem is, there's not enough backward data on this because this is the futures. So probably if I brought up the composite and the cash, I wouldn't have to do this. But let's just go ahead and do this. But look at what this is suggesting here on the monthly chart, that we're seeing there's one more peak as we come into October. So, and then it looks like a giant rollover is being predicted. This red dots here, this is a pivot pattern here. These red dots, we've gotten over this pivot, which is at, let me just find this thing. It's 13,344 is where that breakout point was. So that's going to be the point to watch on the downside if we get any kind of reversals. But this is a monthly chart here, and like I said, I didn't put take the time to change the moving averages. We'll leave them alone. But the PPMs I adjusted, and it looks to me that everything is coming to a peak as we come into first quarter of next year. So yeah, and somebody's claiming we're going to go to 20,000. Certainly could. There's no doubt. There's still a lot of upward momentum here. PPM 1 on this chart is at 3.28. Anything over 0.25 is a trend. We're 15 times that in momentum. This is a big number. So just know that there is a lot of upward momentum yet, and when this thing tops out, maybe this is that debt scenario that just got triggered by looking at that old logic. And by the way, so let's go ahead and go back to the weekly. Let's go. And this is also something we're seeing as well. You can can see that the angle of attack on these moving averages is still valid. Even if we go out, I'm going all the way out to November, we're still at a 0.16. What you can do if you have the indicators and you have the algos on, you can just go to the where the grayed out line is, which is the prediction going forward. And you can see if I put my cursor there on the far right, it's still positive all the way into December at a 0.26, which is still trend mode. So that tells us we should continue to move along that 10-period moving average, just like we saw a couple of months ago when we thought, well, we're going to roll over, and we didn't. That just continued to stay up and above this average. This scenario right here, that if we go all the way back into May, it was starting to look like we were trying to top out. We just maintained enough momentum to continue to climb along that line, and we still have enough momentum. So the 10-week moving average on both the S&P and probably on the Russell as well is absolutely the angle of attack. So I can see already I'm already into this thing 45 minutes. So time flies when you're having fun. So let's go down to the daily here. So daily's coming down into some of these averages, but look what's happening. It looks like we've got literally one day we should stabilize, and we should stay along these moving averages. So if you put the, you can see them over on the far left-hand corner. If you put the WATAR forecast, the WTAR forecast on this, they all are suggesting that we're going to hold into this range, like 15.3 something is the lower end. We should just continue to hover on a daily basis. That's going to be really good support. We're not seeing acceleration here on the NASDAQ. So what we've got for the Thursday after the close, we got Apple and Amazon coming out. So that is that's probably going to influence exactly what we're seeing here. Looks like if there's going to be some weakness, at least initially, it'll be in the S&P. All right, so I'll go to the Russell just daily, and then we'll move on through here. The daily is still showing that we're going to get crossovers, rolling over. All this we should come back into around 1930 level on the Russell. Should see some decent support in there, and it looks like at least in the Monday, Tuesday next week we could see some downside. Not a lot to say on this one, so let's just move on. Let's get through the rest of the show here. You know, I told you folks that I was going to do a yield curve analysis. Let me see if I can hook up this device that I can draw on. Bear with me 1 second. Let me just see if I can find this, folks. Bear with me. Just about there. Oh, nice. Of course, there's an update on this app, so bear with me a second, okay? And I'll just bring this up, so hopefully we. Oh boy, wouldn't you know? I go to use this thing and there's an update, so hopefully it won't want me to reboot. But just as we look at this 10-year, you can see we're starting to move up into this pattern, and all right. Great. It's like frozen my screen. Wonderful. All right. All right. So that's not going to happen. Sorry, folks. So anyway, I was talking about these fib targets up here on the 10-year. Sorry for that interruption. The 415, 430, 440 is the fib targets on the upside. We traded all the way up to RTX on the daily yesterday, and it looks like this should be a peak value, meaning that we should trade off of there. And it looks like everything's downhill from here. At least we should see a peak in momentum and start to move back toward these moving averages back to 395-ish or so. But there's also a scenario that we continue to move higher depending on some of these numbers that are coming out. Let's go over to a weekly here. And this is still the 10-year, and what we're seeing here is we've gotten above that fib target 1, which is I believe 401, 429, and 450 are the fib targets. And like I've been telling you, this upward slope here is exactly where we should continue higher, and the intermediate charts are still going to be dominant here as well. Let's just do the 2-year. And it's interesting because this is the scenario. I'm going to try one thing more to try to get this thing so I can draw this yield curve. But right now, what you can see, that 2-year is differently shaped than the 10. So the 2 is starting to flatten out and move down, with the 10 actually still sloping upwards, suggesting we're going to see higher yields. So this is my scenario. I'm just going to do my best to try to bring this. I don't know why this thing won't let me. I'm going to try one more time. I think this might have worked. Okay, so let's bring this over. So let's just draw this out here. So what I'm going to draw here is our current configuration, which is we've got the very front end up in this really close to 5.5 on the T-bills, and it just kind of slopes down, and then there's a little tweak up here. So this is on the long end. This is we'll call it 425 range over here. So we're seeing that little slope up. What I'm expecting is what we're going to see is the shorter end maybe coming down to 4.25, and then a little slight uptick. So you're basically going to have a flat yield curve going forward, and that will take a lot of this, I guess, the stress out of the banking system. And this will probably indicate if we get this little move up here, if we get this back end to start to come up, that there's some demand coming back in on the back end, or maybe they're loading up the back end. They've got to raise the yields will go up just to create demand. And like I said, this treasury, we'll call it refinancing that they're going to do. They raised a lot of money on the short end of the curve, like 600 billion plus. Now they're going to restructure. There's supposed to be in the morning $1 trillion restructuring announced. So I'll try. Like I said, I'll have plenty of this on Thursday, but this is basically my expectation and what's going to happen to the yield curve. And it's not going to get more like this. It's not going to be more inverted. It's actually going to go from this inversion here to something that looks like this, just kind of crisscrosses at some stage. This is probably 5-year right here. So we got 5 years and then 10 and 30 out here. So the 30 should end up being the higher end of this. Okay, glad I pulled that off. Thanks for your patience on that. Appreciate it. We're about an hour in, and we're at the Treasury. So, but that's the full expectations from the standpoint of, I think, how the yield curve is going to start to switch, and we'll get into where it's called a steepener, where the back end starts to move higher, and then ultimately the back end, we could even see the front end being around 4.25, 4.5 plus on the back end. All right, so let's go ahead and let's hit crude oil. So let me get over here to the daily. Crude just keeps on climbing. Here we are. We're getting close to these Fibonacci targets. Right now, the first target was 84.10, $88.90. So, but it looks to me that we're very close to peaking out. We should start to move back into the 80 handle, maybe 75, and we should start to roll over. It looks like a fairly slow roll, but if you look at all the algos, this is on a daily basis. They're starting to show that we should get some downside and some flattening. It's not going to be like a complete downward reversal, and you can look where we came from. This was those crazy numbers down in the 60 handle. It basically rallied $20 on crude. And like I said, maybe it's a summer driving season. Whatever it is, there's been good demand on oil, and we're definitely seeing that. Whether we can surge up here, I don't think so. I think we're really close to the peak value here. But let's take a quick look at the weekly. Suggests there's the support levels are ended at 70, 78, 80 handle. It does suggest that we could stay all the way into October before we start to flatten out. So that makes sense from the standpoint of what's going on in this scenario. All right, so gold's next. A little bit of downside on the gold market, coming down to test into these ranges. We're closed 1989. We managed to get to, this is a weekly chart, 2010. Peter Schiff got really happy at 2010. Now we're back and moving back in. I think we'll see a range probably around, still coming back to around 1970s, 1960 range should be where we start to stabilize. And it looks to me that we're just going to go flat line. So there's not a lot of excitement there from that standpoint. All right, folks, we're going to be done here in just a minute. Here's our weekly Bitcoin. We still have that upward slope. I saw someone mention when the futures come out, it's going to rally maybe. There's been that scenario before that the futures are going to make it more easily for folks to get involved with it. Maybe that will be the case. We do have these upward targets. The algos are suggesting just flat line, that we're just going to climb up, and we're looking at these values moving up to maybe 30,005, and the first fib target, which would be 35,900, certainly is a probability for us to move in. And maybe that's the impetus from that standpoint. Go daily real quick, and then we're going to call it quits. So we got a little bit of a reversal here today from the standpoint of where we're at on the daily, but there's still some downward pressure. There's still resistance around 29.9, and the support is still at 28.5. We printed down to 28.574 and bounced off of there. So this looks like it's still good support down in here, but I think the weekly charts are exactly what's going on. Okay, folks, that's going to do it. Appreciate it. Actually, right at an hour two. So appreciate everybody's patience trying to bring a couple things. I need to put that PDF out there just as an old example. Maybe I'll put it out on Twitter or something, or maybe even on Discord. Maybe Discord, or even maybe put it out in a newsletter form. So anyway, this is it for me. Be back on Thursday night, and everybody's wishing me a happy birthday. I appreciate it. It's nice to be having birthdays. I've got a whole bunch of friends. I got a long list of people that aren't on the planet anymore. So I feel very grateful to be here hanging out with you folks and doing all the things that I get to do in life. So I really am a very grateful person. So thank you so much, and I will see you on Thursday night. I'm hoping you found tonight's video helpful, especially on the longer term stuff, to bring in some perspective. And I think we've got some very interesting days ahead of us, and can't wait to see them. All right, folks, have a great evening. Have a good day trading tomorrow. We'll see you Thursday night. Yeah, you're right. It'll be 44 years in September. Thank you, folks. always my favorite part.